Hey everyone, welcome back to Corporate Decoder, the place where we turn complicated business filings into something you can actually understand. Today we are diving into a filing from Topgolf Callaway brands, but don't worry, we won't get lost in the rough, we'll cut straight to the green. This report is about a shareholder meeting where some very important decisions were made about how the company pays its employees and how people voted on important matters like who gets to be on the board of directors. Before we begin, if you find getting clear insights from company reports useful, make sure you're subscribed. We also have a Discord community linked in the description below if you want to discuss more. First up, let's talk about the 2022 incentive plan. This is basically a way for Topgolf Callaway brands to reward their employees, especially the top dogs, with things like stock options. Think of it as giving employees a piece of the company so they are motivated to make it do well. The company decided to make some changes, they amended and restated it. These changes were approved by the board of directors back in March, but it didn't officially go into effect until the shareholder meeting in May. So what changed? Well, they increased the number of shares available to be given out by 13.5 million. This means there's now a bigger pie to share, stock options and stock appreciation rights, which are like the right to buy stock at a certain price, still reduce the number of shares available on a one-for-one basis. However, they also have something called full value awards. These are basically anything that's not an option or stock appreciation right. And these reduce the shares by a ratio of 2 to 1, meaning for every share issued, the total available shares goes down by 2. This is called a fungible share ratio. There are a couple of limits to keep in mind. No more than 30 million shares can be issued through incentive stock options, and these options can't be granted after 10 years from when the board or the shareholders approve the plan. The plan will stay in place until it's ended, as it says in the document. If you want to read all the fine print, you can find it in the proxy statement filed with the Securities and Exchange Commission in April. Now let's move on to the actual shareholder meeting that took place in late May. There were 328 sale out there, and about 81,806 shares were represented at the meeting. That's a pretty good turnout. Shareholders voted on 4 different proposals, which we will get into in a second. First, there was the annual election of directors. This is when shareholders get to vote on who gets to sit on the company's board. It's kind of like voting for student council, but with a lot more money on the line. Here's how the voting went down. Oliver G. Chip Brewer III got 36,980 odds, 526 votes against. John F. Lundgren had 135,288,354 for and 247,285 on 18-1 at 155 against. Addy J. Anderson Vonley got 47 to 507, 91,507, 91,505 and 105, 99,9, 75,259,507, 42 against. Addy S. and 13,9 against. Bavin M. Holloway got 1,417, 4th on 907.99 against. Lagan 59 against. Davanini Tund. Bavin M. Holloway got 1,417, 10 Sissinton 22 votes for and 7,791, 590.99 in Sen. 1351,751,107 on T5,002. Next, the shareholders voted to approve Deloitte and Touchel as the company's independent accounting firm for the fiscal year ending December 31, 2025. This is basically giving the thumbs up to the people who will be checking the company's financial records. The numbers are 598 against and 307,152,093 voted for, 1,162,093 voted for, 1,612,598 against, and 352,093 voted 7,015,2,093 voted for, 1,612,598 against, and 307,152,093 voted for, 1,062,093 voted for, 1,098 against, and 307,598 against, and 307,515. Shareholders also got to give their opinion on how much the company's top executives are paid. It's an advisory vote, meaning the company doesn't have to listen, but it's a good way to see what the shareholders think. 132,582,960 voted for, 2,383,502 dead. 80,347 abstained, 147 abstained. And finally, there was the vote on the amended and restated 2022 incentive plan, the one we talked about at the beginning. 135,623,046 voted for 2,491 against, and 158,391 against, and 1,504 HI abstained. With the shareholders approving the plan, it is now officially in place. So what does all of this mean? Well, first off, the company is making sure its employees, especially the executives, are incentivized to do well by offering them more stock-based rewards. This can be good for the company in the long run as it aligns the interests of the employees with those of the shareholders. The votes at the annual meeting show that shareholders are generally supportive of the company's direction. The directors were all elected without major opposition, and the other proposals were also approved. It shows shareholders are putting their trust into the board and executives and are in agreement with the company's compensation structure. One thing that could be a potential risk is that by increasing the number of shares available for issuance, the company could be diluting the value of existing shares. This means that each share is now worth slightly less as there are more shares floating around. However, the company seems to believe that the benefits of incentivizing employees outweigh this risk. Alright, that's our breakdown of Topgolf Callaway brand's latest filing. What's your take on these votes and the direction of the company? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.